Hi there, welcome to another edition of TokStocks. I'm your host, Keir Reynolds, and today we're lucky enough to have Andrew Pollard, President and CEO for Blackrock SilverCorp with us. Blackrock trades with the ticker BRC on the TSX Venture Exchange. And Andrew, how you doing?
I've never been told it's lucky to have me in one's company, but no, I appreciate the invitation. It's good to catch up with you. It's been a little while.
Yeah, well, let's keep the streak going. You're two for two. Each time that you've been on, your share price has been higher the next time you've come back. So let's sort of keep the streak going. When we first caught up with you, probably December 2024, I think you were sort of around 25 cents. Last time you were on, around 40. Today you're just over 50, 55 or something like that today. So let's keep the streak going. You're one of my favorite pure play single asset silver deals out there. I'm a shareholder of the company, and really appreciate you giving us some time here for a good solid update. It's been a hot minute since we last chatted.
Yeah, well, it's been a busy year for us on the drills, and we're staring down a couple pretty big catalysts in the imminent future, and also downline in the next 6 months as well. So, yeah, good time to update. In fact, we just announced the results of our last set of expansion drilling from that phase of the program, and yeah, projects getting bigger, and with a resource coming out in September, focused on moving inferred ounces to M&I in the early years of production. I think that people are going to be impressed with the grade profile that we're able to establish, and answer the unanswered question about our project is, can we meaningfully convert the inferred resources to M&I? So yeah, a lot to look forward to.
Excellent. Well, before we unpack all that, maybe you could just give a little brief introduction, who you are, how you sort of got into the industry, and how you found yourself as CEO now today of Blackrock. Just a little history.
I'm officially in the mining industry for 2 decades now. I got my foot in the door when I was 19. I'm 40 now. I started my first company in the industry when I was 20 years old. It was actually building management teams for mining companies. It grew to be one of the best, certainly the most known executive search firm in Canada that was doing CEO placements, building boards, helping companies change from exploration to development to production in terms of building out their manpower, and that whole dynamic. So along the way, up until I took the role of Blackrock, really my secret sauce was, mining companies come down to 2 things: projects and people. And most people get so myopic about the projects that they really, really don't know how to go beyond their network to find the best. So I came with a different perspective. I'd focus on the people side first, and then, the people can generate the projects and such. And that little black book allowed me to come into Blackrock in 2019. It was May of 2019. It wasn't out of inspiration. I was a shareholder. I'd written some large checks into it in the years previous. But management had dropped the ball from my perspective, and 3 cents, $1 million market cap when I came in. No one wanted the job, and the company was facing, I was going to get delisted effectively. It was insolvent. And I said, well, finally, this is a challenge that I can probably tackle. If it's a people issue, well, let's see if what I've been doing for the previous 15 years was bullshit or not. And I came in, and within a week, I brought on Bill Howell as our executive chairman. Bill was one hell of a person to bring on. He was former head of exploration for Placer Dome. He had oversight over everything they had in Nevada. Coming into Blackrock, he'd already discovered 100 million ounces of gold in his career. And it was like we won the lotto. And then about 6 months after he joined, he brought us an opportunity. It was a consolidation of a very famous district in Nevada that hadn't seen any modern exploration since production shut down in the early 1930s. And that quickly became our flagship. We did an option deal on that. Our first option payment was $250,000. Bill did all of this modeling, and he said if the historic record's correct, where they stopped mining in this one area, the vein was said to be 24 meters thick. Well, we hit, on our very first drill hole, we hit 30 meters of a kilogram per ton silver equivalent. That was 5 years ago this week that we made that announcement. And here we are the first one to ever drill this property. We've now got 100 million silver equivalent ounces outlined. This is the highest grade development project in the world, by a huge margin at that, when you look at our head grade versus others. And it's on private land in Nevada, which means it's got, a very, very clear expedited path to get this permitted. So here we are 5 years later. We've put out multiple resources. We put out a PEA last September, which showed the potential for this to be one of the lowest cost silver mines globally. That's a function of the grade, it's a function of the metallurgy, and it's a function of the geometry of the deposit, I guess, too. And now what we're doing is since that PEA came out, we've completed 35,000 meters of drilling. That drilling's focused on upgrading confidence in our ounces and moving ounces from inferred to M&I, especially in the early years of production. That's really the idea behind that, is we want to de-risk and make the investment decision bulletproof to ultimately make the decision to go underground and start test mining this thing. And then the other aspect of our drilling is to just blow the doors off the upside in terms of scale, in terms of ounces, and we're well on our way there. So we've got two resources planned, one in September, one in January. The January one's going to be showing the growth in scale and size, and the one in September is going to be focused on the optimization of the early years. But it's come a long way very quickly. Everything we're doing this year on the drills and behind the scenes is going to put us in a position where we think we'll have permits in hand to actually break ground on this thing, to start going underground by the end of next year if all goes according to plan. So from first discovery hole to breaking ground on this thing in about 6 years or less.
Phenomenal. Lots to unpack there. You've covered lots of great ground. Congrats on the success that you've had since taking the helm of this thing, and it's always a pleasure to speak with you. Just a little tidbit. The very first time we got you on camera to talk about Blackrock, this was sort of this will be 3 episodes ago, 3 episodes with you, but it was back in 2024. Gold was $2,000 an ounce. Silver was $23 an ounce. Mm-hmm. And here we are today. Silver, the mid 3,000, and silver, what is it, $38, $39 an ounce here. Mm-hmm. And you predicted that these things would go up, and by golly, they have. So,
well, it's funny you say those numbers too, because if you look at our PEA, I'm pretty sure our PEA's base case is exactly at those numbers. Those are, I think, $1,900 gold and $23 silver, which our PEA was done at. And I mean, it was wildly robust at those numbers. So we haven't even looked at where things would end up now at $3,300 gold and 37 silver. But obviously more is better. Higher is better.
You'd probably have a little bit quicker payback, which would get you under that 2-year sort of mark, which I think
correct
would be very, very, very robust, and probably have somebody snapping this thing up if you don't beat them to it and put it into production yourself. But anyways, we got lots to unpack. You mentioned a lot of things. I just thought I'd bring up. You guys had some pretty impressive drilling here recently. You had a very thick interval. Nice big broad interval of very, very high grade sort of silver. I think that result was out probably, if I'm not mistaken, maybe 4 or 5 weeks ago. Might have been a little bit last. Time flies.
Yeah, no, we put our last set of drill results out, I think, last Tuesday. So not all that long ago. Those were expansion results too. So these are step outs, and we had 2 really thick zones in there, both high grade. One was 11.5 meters of, I think, 467 silver equivalent, and then we had a 10.5 meter zone of like 330. So yeah, we're hitting some really, really thick zones in this portion, and this is where we sort of doubled back. Back in March, we did some widely spaced holes across a 500 meter zone, and one of the first assays from that was an 8 meter interval as well. So what we did was we took that 500 meters, and then we just went back to infill this so that we can include this in our expansion resource. And we had a lot of really good thick hits there. But that's the tons and ounces build really quickly when you're hitting intervals like that with grades like that. So that speaks to blowing out the mine life on the back end for sure. And all the expansion drilling we're doing, what's nice about it is we're not chasing standalone targets. Every single drill hole we're doing this year is bolt-on mineralization, just stepping out from the existing zones, the existing mine plan outward. So the definition of low-hanging, low economic threshold ounces that we're adding quickly and cheaply.
Great. So we're talking about Tonopah West. How big is the overall property? How many hectares? How big is
All
it?
in, it's about 25 square kilometers. Now the individual. Now we've got two parcels really. We've got our patented claims, and then we've got a big 20 square kilometer BLM, like federal lands that directly adjoin it. The patented claims, that it's 5 by 5. So yeah, it's about 20 square kilometers in there.
And in terms of the project, how many meters of drilling's been done so far since Blackrock has had it?
Yeah, we've done well over 150,000. I think we're currently at 156,000 meters, or 156 kilometers of drilling.
Nice.
Yeah.
And
That's a lot of steel.
And this is like an underground sort of vein style deposit.
Yeah. Well, historically, I mean, this is one of the best underground silver mines districts in the world. When it was producing between 1900 and 1930, Tonopah was known as the richest place on earth. And yeah, all of that production came from really, really high grade veins of gold and silver. And the old timers made the discovery from outcropping veins at surface, and then they followed them right down. And right now our mineralization in our current PEA and our last resource, it started around 200 meters below surface. But as a function of all the drilling we've done this year, we hit a lot of mineralization up dip, so nearer to surface. So we're seeing ultra high grades start from, say, about 130 meters down hole. So this upcoming resource in September, you're going to see a lot of new tons outer board of the existing PEA, bringing it closer to surface too, which means we're front loading ultra high grade tons at the beginning of the mine life, which will have a very positive consequence, we think, for the economics when all said and done.
And so you've got a new resource calculation coming out in September, you're saying, and then you're also slated to, some months after that, also put out an updated PEA. Is that correct?
Well, we're going to do two things. The resource in September is the first one, and that's our conversion drilling, where we're trying to convert, say, 1 million to 1.5 million tons of material based off of the mine plan. So the first 2 to 3 years of the production to M&I. So really show the market that we can, move those inferred ounces over there. And as a function of that, we expect the grade profile to ratchet up. I won't say significantly, but certainly meaningfully, because as you tighten up the drill spacing, you don't get discounted so much in terms of the geostatistics of it all. But also as a function of this drilling, we hit some of the highest grades ever at the project. So I wouldn't be surprised to see a pretty significant boost from just the higher grades. We've been locking in on that. And then we're thinking in maybe early Q1 of next year, we'll have a second resource out there, which will incorporate all of the expansion work that we've done and are going to do on the drills for the upcoming program that we're going to lay out shortly.
Excellent. So then the project looks like the global resource might be able to get bigger based upon the success of that.
It's going to get a lot bigger. Yeah, I think people don't quite. I think people still think it's only going to grow incrementally. I'll put it this way. With all of the strike extensions that we want to drill out this year, if we're successful in doing that all, we'll effectively have doubled the strike of the resource area. So, and that's just what we're doing from surface. So, not only do I think we'll establish ourselves with a very meaningful M&I credit, and that's one thing that's been holding back our valuation compared to how other high-grade stories in the industry are trading on like an EV ounce in the ground basis. We're still trading at a fairly significant discount to the 2 or 3 other high-grade stories in the industry, and that's despite our true grade being substantially higher and better jurisdiction and all of that. But it's just because we're the only one out there that's all inferred at this point. So once people can see that, I think that's going to be a real re-rate for us. And then, of course, showing the scale of this project in Q1 of next year and just the growth we're able to lock in via the drill bit. I think that's going to blow a lot of people away. Both of those resources will then be incorporated into a whole new PEA, either by the end of Q1 or early Q2 next year. And at that point, we'll be also in a position to make our submission to the regulators to get this thing permitted and ultimately start working our way underground and test mining and drilling out and doing, conversion drilling and I guess grade reconciliation and all of that good stuff and stacking tons.
Hey, there we go. That sounds wonderful. So just to reiterate a little bit about what you've already got. So existing resource calc, the one that's all inferred, how many tons is that sort of in total?
That's about 6.3 million tons. It's around 500 grams per ton block diluted grade. So we factor in dilution into all of our resources, whereas most everyone else presents undiluted. But that lends itself to, once you move into a mining scenario and everyone has to factor in dilution and come up with real head grades, our head grade doesn't change all that much, whereas everyone else tends to step down significantly because that's when they have to actually factor in dilution. When you look at, if you were to break our resource out independently, we're just slightly under 50 million ounces of silver at this point. And then our pesky only other byproduct is gold. And we've got 577,000 ounces of gold. And what's really nice about our project is that if you look at our gold grades and our silver grades independently, both of them are above the cutoff grade of the project. What that means is that if I were to use gold as a byproduct credit, for example, we're producing silver at negative cash costs. Every ounce, it's just pure blue sky. And the same could be said about silver as a byproduct. We'd be producing gold at negative cash costs. So, whether you like one more than the other, or, they both tend to move sort of in lockstep with each other with, I guess, more volatility and bigger potential moves in silver, then, this is a good project. And another benefit of just being gold and silver versus polymetallics, which I'd say 90% of the other sort of explorers and developers are, is because we don't have any lead or zinc mixed into our silver equivalents. It makes it really, really straightforward to process. We don't have to, do flotation in our circuit. We don't have to make lead and zinc cons. We don't have to get a smelter involved. Ours will be a doré at site. And what that means, simpler means cheaper. So not only are we higher grade, but to actually recover the gold and silver, it's an easier process with less hands and steps along the way. So higher margin ounces there too as well.
Every time I talk to you, it sounds phenomenal. I wonder why you're still around as an independent company, why you haven't been sort of snapped up. So we'll see what happens.
The market, that's... you can tell we're sort of in the early stages of what looks like the beginning of a nice cyclical bull here for silver. Is you still haven't seen those premium M&A deals work their way down to the developers or the explorcos yet. What you've seen is all of the quality or most of the quality large scale single asset producers that are spitting off free cash flow. Those are the ones that have been purchased, and I guess all the corporates have been waiting for those projects to get de-risked and to really have proof of concept. And then they're happy to come in, and they're just buying today's production. The industry isn't yet focused on tomorrow yet, but most every of those projects is now gone. That will move the needle for a large cap producer. So really, the next shoe to drop for the industry will be one of the corporates to come in and write a big check, big premium deal for one of the few developers out there. So yeah, that's how it's still early days.
And if I'm not mistaken, you mentioned something about breaking ground or getting underground or doing something, putting a portal in, if I'm not mistaken. Mm-hmm. That's sort of the first time I've kind of heard, since we've chatted, since we've been doing this. Again, it's been quite a while since I last had you on. It's been eight or 9 months. First time I've sort of heard that. So is that what I think it sounds like? Like you would be starting to get into development and
we're sort of following the exact same path that Vizsla is right now. They're about a year and a half ahead of us, but really what you want to do is you want to get your permit to go underground, and ultimately it will allow you to it'll switch our current permits from exploration to exploitation, and that'll allow us to build a commercial size decline to get us over the initial test mine area. So years 1 and 2 of production. It'll allow us to get underground and start drilling out from underground galleries. It'll allow us to actually test out our mining methods and confirm, rock stability and all of that stuff. It'll allow us to start stacking tons, and whether we toll mill it or we just stack it and wait for a production decision. It'll allow us to do a large bulk sample. All these things that will then put us in a position to either do a feasibility and ultimately build the thing, build the mill at surface, which would be the last thing to do. But it would be pretty quick going from there. The biggest aspect of the permitting is what we're doing right now, which is our water control permit, our air quality permits, all of our rock chip characterization, and knowing exactly the characterization of the stuff that'll be on the pads itself. So all of that stuff is ticking as we go, and that's perfect timing because that's working in lockstep with our optimization of the early years of production right now, which is this M&I resource that's coming out, and ultimately the mine plan that will form the basis for the next PEA. So the rubber's really going to hit the road. I mean, upgrading our ounces, expanding the scale, expanding our ounces, getting a new PEA, and getting permits. Those are 4 key re-rates, all expected within the next 12 months.
And in terms of the existing PEA that you've got, how many years worth of production, and what was sort of the annual kind of production in terms of silver ounces?
So the PEA outlined 8.6 million silver equivalent ounces produced on average over just under 8-year mine life. So we did that PEA at $1,900 gold and $23 silver for a base case. And at that, you're looking at about a $326 million US NPV5 and a 40% after-tax IRR. Now, we had one upside case in there, which was, I guess, the base case plus 20%. So it had the upside case was 2280 gold and 2760 silver. The NPV rockets up from 326 million to just under $500 million. The IRR ratchets up to 54%. And I guess, one thing I didn't mention was that 8.6 million ounces per year on average, that's a cash cost that are below $12 all in sustaining. It's $11.96. This has the potential to be the lowest cost or one of the lowest cost mines in the world when all is said and done.
So did you ever think that you were going to be CEO of a company that developed a silver mine?
Life happens when you're planning other things, doesn't it? But ultimately I hire good people and I listen to them, and yeah, it's been a wild ride. But this is, I mean, there just hasn't been that many discoveries in the silver business, but I mean, this is going to be one of the most consequential rediscoveries of the decade. I mean, I'll be shocked if this isn't in full scale commercial production by the end of the decade, which is unheard of. And by the looks of it, it's going to be just a cash machine. I mean, the PEA that we discuss now, I've almost sort of forgotten about these sorts of things because I know just based off what we're seeing that the economics and even the production profile is going to be changing so much. Yeah. We're at a point now where, the magic number for us in terms of mine life is to get it to 10 years. So the PEA, that's based off of a 1,500 ton per day mill. Once we get up to 10 years of production, just with all of our expansion drilling, that's when we'll start to look at expanding that mill to a larger profile. So maybe it goes from 1,500 tons to 2,000 tons per day, meaning, between now and our next PEA, not only if we expand that, this will have the potential to go from a very nice production profile. I mean, our production profile as it stands currently is roughly what SilverCrest's production profile was, and they just got bought out by Corp for $2 billion. but we think we can grow it meaningfully. Potentially it'll be 10 million ounces or more per year. And as you increase the mill size, typically your cash costs go down. So all the drilling that we were going to be embarking on soon, I already think we're sort of at that point now where we've hit that 10-year mark, given the expansion results so far and the current mill size. So every new meter of strike extension that we lock in here just justifies the case to expand this and expand the production profile and expand the galaxy of companies that would want this. Ultimately, the truly big boys.
And you're talking to these big boys, more often than most of my viewers are. What do you think? What do you think? What's the most important factor these days? Is it like grade? Is it the margin? Is it capex? Is it life of mine, number of tons, simple metallurgy?
Everyone, everyone. Grade is king, obviously. Jurisdiction. A lot of different places are causing headaches for differing reasons. But really, I expect the most advanced. The way the M&A has gone thus far is that up until recently, all of the quality development stories had to go it alone. No one was getting bought in development. They had to go to commercial production, and probably they had to get like a year or two under their belts. Look at Mag just recently. Look at Silvercrest, year 2 of commercial production. Gatos, they had to have their proof of concept after they had an early initial. And so, I think the M&A, it was disastrous in the early 2010s. There was a feeding frenzy. Companies were paying money hand over fist to acquire good development and exploration assets, and then a lot of them just blew up in their faces. And then, of course, silver had the tides come out as well. So I think now what you're seeing is these companies are watching on the sidelines, and they're watching projects get de-risked and move forward. So I think it'll be permitted projects or those projects that can be seemingly moved towards production very quickly that'll have the next biggest target on their back. Obviously, economic potential is going to be king as well. And then I think it's going to be a long while before things go down to the explorers and the ones. I think a lot of the producers have learned their lessons.
Good, yeah, good stuff. Thanks for giving us a good overview on that, and
that's good for us because that gives us time to get our valuation to match up where this project can be. I mean, permitted projects are worth a hell of a lot more than unpermitted ones. Bigger projects command, more
Sure.
ounces tend to be more dollars, and de-risked ounces, M&I, all of that. So as I said, I think we've got 4 key drivers that will seriously drive our market over the coming months. And, if we get to that point, and silver does what I think it's going to do, then maybe someone will try and take us out before we do end up breaking ground. But, it'll be a very different looking company by that point anyway, because it will be on the back of all of these different accretive moves for us.
Well, you seem pretty excited, pretty electric. Probably the most electric that I've seen since we've sort of spoken on the story. Great to see, awesome to see when you're having fun and having some success. Why don't we turn our attention to the cap table a little bit? Thanks for giving us a good overview on the quality of the asset and the catalysts you have coming. How many shares are outstanding approximately at this point, at this stage?
Yeah, so we're tradable right now. It's about 315 million, fully diluted. We're at about 390. Our market cap as of today is around 180 million, and that's we've moved quite a bit. And for example, in April, I think we traded down to 26 cents or 26.5 cents, and we hit a high of 61 cents on huge volume just last week following the last of our expansion results. We've been tightening up quite a bit since we put the last of our M&I results out in mid-June. I think the market was really waiting to see those. Because included in that was the full assay table from that entire program. And the market was able to see in totality the results rather than just seeing tranches of sporadic results. And when you're trying to demonstrate continuity, it's hard to get an idea of continuity from a few drill holes at a time. But when you see the full assay table, you're like, okay, wow. So just on the back of that, we'd ran like 55% once we got those M&I results out. And what's really encouraging is, our volumes have been stratospheric. June was our highest volume month of the year by a big margin. In July, it's July 17th today when we're recording this. We've almost surpassed what all of the month of June in terms of dollar volume. And, it's looking good. And along the way, I mean, we've seen, Eric, who's been our largest shareholder, he's been buying us relentlessly in the markets and averaging up, which is nice to see. And, we're also at that point now where this $180 million market cap with real intrinsic value in the project already established, we're able to get into institutions that we couldn't really get meetings with before. We're investable now. We're large enough that people can contemplate putting $5 or $10 million into us, either buying in the market or writing checks. And this is the first time where, we've got lots of groups, lots of new ones who have also been buying in the market, establishing positions, and a lot of others doing work on us right now. So I see this September resource. I wouldn't be surprised to see volume continuing to move upwards leading up to that. And I think, we're in a good position to outperform some expectations come September. But yeah.
Well, you're a U.S. based asset. U.S. seems to be one of these jurisdictions which is looking really interesting. The U.S. administration.
It's never looked better. It's look, every day, every other day, you're seeing positive news releases out there from either projects getting permitted. This administration's pulling projects out of permitting purgatory and fast tracking. They just make gold a critical mineral. Luckily for us, gold is a large portion of our project, and where that's applicable for us is it's not going to help us on the permitting because we're already looking at an expedited permitting process because we bypassed the whole federal regulatory, overview. It's just the state and county that permits our project. But where it becomes really interesting is in terms of the financial backing that the administration down there is giving to critical minerals projects down there. You're seeing LOIs being announced every day, every other day for projects that are of critical nature because the government wants the jobs. And Nevada, actually, I just saw yesterday, has the highest unemployment rate in America right now. So we think there's going to be the wheels are getting greased to help us push this project together, and hopefully the bank of Uncle Sam will be helping to come to the table and with respect to some favorable loans along the way.
Yeah, excellent. And when was the last financing? It was a bought deal, if I'm not mistaken. Maybe you could just give us like the
So our last financing was in January. We raised just under $14 million at 36 cents. That was a bought deal. We just put our financials out a couple of weeks ago. So for our Q2, so our Q2 ends in April 30th. So as of April 30th, we had $10.5 million Canadian in the treasury. And I guess what's actually like nice about that is that we stopped our resource drilling at the beginning of May. So the bulk of that money that's there is still there, which puts us in a very nice position to get the drills back imminently at the project and really embark on the lowest hanging of the fruits for our next leg of our resource expansion program. And it's looking like we're going to go with about with drilling out about 1.2 kilometers of bolt-on strike extension on a very shallow new discovery we made, which looks pretty good already, and that has the potential to seriously move the scale of this thing. We'll blow the doors off the upside of this project if we're successful. And the best part is because it's shallow, it'll probably only take us 2 to 3 months to do.
Wow, that sounds spectacular. This has been an exciting interview, to say the least. I'm glad that we were able to catch up. It was nice to see you when I was in town for a golf tournament that I bumped into you, and you definitely seem to be buzzing with excitement. So I can see why. Got the tiger by the tail, got an exciting project, and some things are sort of lining up. So do you think, based upon that last raise, do you think are you fully funded for the type of work that you want to do for the balance of the year?
Yeah, as it stands, well, we're doubly good, and not only are we getting the drills back pretty quickly here, and we got low hanging fruit to add a lot of ounces. I mean, this upcoming program, I expect that we'll add more ounces quicker and cheaper than we've ever done in the history of the project, just given the nature of these targets and what we know about it already. But an aspect of where we're trading right now is, I mean, we're seeing money come in the door quite regularly. We've got a lot of warrants that are in the money, none expiring, with any immediacy, but it's quite orderly, which is good. We're chewing through and churning some money, so that's going to put us in a good position. I think, I mean, we'll see what happens in terms of how the stock performs. But with the volume we're doing, with my internal expectations about how things will react following our upcoming resource in September, and then obviously having more, hopefully high-grade assays coming down the pipe in the not-too-distant future either, I expect we'll be able to just keep our head above water and put our head down and not really have to do much of anything other than do what's best for the project. So yeah, this is the best position financially we've been in a long time. And, a lot of people would love to give us money right now. That's for sure. Obviously, you've seen a lot of other silver companies finance given silver's recent breakouts, but there's not a chance that I'm going to do anything right now to disturb what we got going on here, because I think that once we're removing really the only final piece of skepticism that some people have about the project, which is our ability to convert our ounces. And once that's done, game over.
Nice. I like that. Now, you mentioned that are you drilling right now? You're doing some drilling?
We're laying out targets and we're sorting out contractors right now. I think we'll have drills back before the end of the month. So stay tuned for news on that front as we finalize things.
Great. And maybe just to sort of summarize, we've covered a lot of ground. You've definitely haven't minced your words. You've been very, very good about that, making sure we pay attention. But just if you wouldn't mind summarizing a couple of the key catalysts that we can sort of watch for, what are they in the next sort of 6?
Yeah, I mean, I'm not aware of any other developer or exploration company that's got 4 different truly meaningful re-rates opportunity laid out, pretty much like quarter by quarter almost. So resource in September, finally giving us a significant M&I credit. I'm going to go out on a limb, and I think we'll have the highest M&I grade in the industry, certainly at least of the explorers or the developers. So that's going to be a meaningful one. Then we'll have the expansion drilling going on through the fall, and we'll have an expansion-focused resource where we expect we can add a lot of ounces. If we get all the drilling that we want to get done for that expansion resource, we'll have doubled the strike length of the resource area from what it is currently. So people can do math. Third is the PEA, end of Q1, early Q2. Fourth is getting permits from the regulators to break ground on this thing and start ultimately working our way underground.
Well, Andrew, it's been an awesome episode. I really appreciate you spending a bit of time with us and catching us up. I was sort of wondering when we were kind of chatting last time, wondering, it looks like it's going to be an exploration only story for a while. You'll just be adding ounces. And
no, we're not. There's a lot of mineral. There's a lot of companies that are just mineral inventories or stacking out. No, this is something that this is a standalone. This is going to be a mine. This is something that we can advance very quickly, and our ability to grow our market valuation isn't tied to random ounces, kilometers away in a hub and spoke or whatever. No, this is one big system that we're just tying together all together as one right now. And it's a very straightforward operation. And it's going to be, it's got the potential to be one of the lowest cost, most robust mines globally. And if you have something like that, don't mess around. Just put your head down and do it.
Excellent. Well, any other sort of final sort of thoughts? What about the macro? What about sort of the metals and mining space? Any sort of thoughts on? And you've already mentioned a few things about what it's like to work in the U.S. and some of the benefits, and the current administration being quite favorable to approving permits and things like that. What about the whole what about the industry as a whole? What do you think?
I mean, I think the outlook for gold is, even though it's run so much, I think it's if you go look at a 20-year chart, it's just been amazing. And I think, there's a lot more legs left to this. And silver, this move that we've seen from, say 30 to 37, that's not a silver bull market. Go back, go look at 2000 to 2009, look at 2011. You're not looking for 30% gains when silver goes, it goes parabolic. But I try not to really get too excited or euphoric about any of that price action, or even the day-to-day price action in what we're doing, because I know that we got a project that's going to make money in really any pricing environment, and we focus on what we can control. Be like a home developer, focus on the day-to-day, sales trends. If build something good, whether it's gold or silver or widgets we're selling, we're going to focus on having the best economics that we possibly can, and I think this is going to be something that truly stands out. So, yeah, I expect silver. I mean, you're seeing all the banks right now up their targets. 41 seems to be the new 35. And gold, I think, is just going to keep chugging along. I mean, central banks are still buying. There's still just debts, catastrophes out there globally. Trump's pushing for rate cuts. All of these things are going to devalue the dollar, and ultimately, people will want bullion as a backup. So there's that. And silver, I mean, structural deficit for I don't know how many years ongoing. Consumption is moving on an industrial side, outpacing most expectations. You're looking at new forms of batteries coming online for solar. The Samsung solar solid state battery for EVs, which will change the game and uses like kilograms of silver. All those things point to a good place to be. So gold, silver, I like the outlook for both, but best of all is it doesn't really matter, because this is a project that if it grows the way I think we will, it's going to get built regardless.
Well, Andrew, why don't we leave it there? Thanks so much. I really appreciate you spending some time giving us a very meaningful update. And why don't we catch up with you after you get that resource out, and we can go through that in some detail, and you can walk us through it together. So I appreciate it. Have a great rest of the summer. Keep working hard, and we're happy to be a shareholder, and happy to have Blackrock Silver as one of our 24 stocks that's in our TokStocks portfolio. So appreciate it.
My goodness. Okay. Thank you. Cheers.
Thank you.